channel today, and we're going to be analyzing the market using different methods of analysis. Now, what do we have here? What is this setup we have here? I have my chart clearly marked out already. Now, for some people, they will claim to be smart money traders, classifying the others as retail traders. But for all of us, there is one thing we should realize, that we are trading a market that is 100% random. Are there recurring phenomena in the market? Yes. Are several things bound to reoccur in the market? Yes. But there is no guarantee of results. That is why if you are right, you should be right, but when you're not, your stop loss should do the job. Now look at setup like this. I'm going to analyze it from different perspectives, from different methods of analysis. Now look at this. What do we have here? You can see price creating higher highs, the structure breaking to the upside, a break of structure to the upside, break of structure to the upside, uh, and then price breaking this structure to the lower side. Now if you are a smart money trader, what are you supposed to do? When you see a shift in momentum, you're supposed to draw your Fibonacci tool and wait for retracement back up to your OTE levels, which is the 62% retracement, the 70 retracement, or the 79% retracement. Yeah, that's cool. If you did that, you could have gotten this position right and are riding the trend all the way down. Now let's look at this from another perspective. You can see price making higher highs and RSI making lower highs. So this indicates price weakness. So this RSI information is telling us, although the price is rising, the strength is weak. And now for people who trade with trend lines, after seeing the RSI, what are they going to do? This. Just something as simple as this. Connect your low to another low. And then what do we have here? Market creating this high and breaking below our trend line. Now look at the confluence here. Your market breaking below your trend line and your market breaking your previous structure from the other method of analysis. Now look at this. So we have traders watching out for same thing in the market. Now for those who are patient enough, they are going to wait for a retracement of the trend line and take a short position. Now this is equivalent of you waiting for your structure break and waiting for price to retrace back to your OTE levels. Now why am I explaining all of this? The truth is, many people fail in the market because the market is so simple that nearly everything works. Yes, that's true. Nearly everything works. If you trade with trend line, it's going to work. You trade with price channel, it's going to work. So we are always looking for more information, something more difficult. But I guarantee you it will be easier if you come into the market and stick by just a simple method, knowing that you're almost certain to have a random result. And if you are right, you're going to make profit. But if you are wrong, you are going to be stopped out with a protected loss amount. Now, a lot of these methods are going to give you confluence. They're going to give you confluence. You trade RSI divergence, you trade you combine it with your trend line break, or you just trade just even your trend line break, trade psychological numbers. They're going to give you a lot of divergence. Now analysis paralysis, you already know what you're supposed to do, but you keep analyzing, keep looking for more information. And this is where the market has advantage over us, because it shows us clearly what it wants to do, but then we start predicting what it is not supposed to do. Now look at this. Look at this, you being a smart money trader or something else. It's so simple. You can see markets recreating the same stuff over, break your structure to the lower side, retrace back up to 70%, and then you see price breaking the structure to the lower side, retrace back up to 70%, same thing, retrace, same thing, retrace. Now our brain is very trickish. It tends to show us what we want to see. Now look at this from another perspective. Look at this market trading back to previous breakers. Trade back, trade below, come back, trade into a breaker, and then continue, trade into a breaker, and then continue, trade into a breaker, then continue. So you tend to see what you want to see from the market, but what we all really should be trying to see is what the market is showing, not just what technical analysis is saying. If your price is weak, don't buy, sell, even when price is low. Okay, look at this point here. You're trying to find a resistance because price has been trading down, and you believe this is discounted price, and it's at the previous low. One, two touch of the support zone. Sorry, it's a support zone. One, two touches of the support zone, and then look at this. You bought, and all of a moment, it's rising. Yeah, I'm right. I'm making profit. And the next thing, it crashes against you. Maybe you hit your stop loss or something. Now, the next moment, you see price rising here, and you'll be like, "Ooh, I was right. Should have held on to my position." Yes, everything is almost right in this market. That is why a multitude of people are wrong. Now, look at this. But it's so simple. You are almost right trading any direction in this particular setup. You're trading support and knowing where to target, you are right. You trading your mitigation blocks, you are right. You trend line, trading your trend line, yes, you are right. Market coming back, retest your trend line, trade to the lower side, come back to your trend line, retrace to the lower side. Yes, you are right. You will always continue to be right, and you will continue to ignore the informations that make you right and seek for things to validate your opinion why you want to be wrong, and you will likely be trading the wrong side of the market if you keep on dwelling on which method of technical analysis. If you don't work on your psychological game, you are going to keep switching from one method of technical analysis to another method, thinking your method is not effective enough. But the analysis you need the most is your psychological analysis, your mental analysis, because nearly every method of technical analysis you do in this market is almost going to work. So work on yourself, work on your ability to manage trade, work on patience to hold trade and allow them to play out in the market. Just be patient enough, spot good setup, especially in the high time frame. Your results are always going to be random. Whatever position, whatever analysis you make, you have 50% chance of failure and 50% chance of success. So you trying to trade the markets too much is you exposing yourself to more risk and not necessarily more reward. Not necessarily more reward. So if you have a good setup, like you took a short position and your position is running toward your direction, yes, you are right in that case. And instead of you try to jump out of the market, you want to try to scale that profit to the maximum. You want to scale it to the maximum, yes? It's that simple. You add to a losing position, but you don't add to your winning positions. Why do you do that? What do you do that for? You're interested in building your losses, but you're not interested in building your profit. That is something in the markets. We fear winning, but we don't fear losing. We hope when we are losing, we hope it's gonna come up. But when we are winning, we fear it's gonna come down. You're in a buy position, you are winning, you're going to be fearing it's going to come down. But if you're in a buy position and it's going down, you hope it goes up and you keep buying, you keep buying. Now, when it's going up, why do you not just keep buying? Keep buying at different levels, keep buying. Why do you not scale up your profit? Now, a lot of times I do this, I see that I will be able to flip a small account, even $10 to 200, 100, 300, and so forth, just by scaling one trade. But that same things that make the market work for our advantage is the same thing we don't want to do. Once we are in a position in a small account and we're making a small profit, we jump out. We're in a small position, we jump out. Small profit, we jump out. But when we are in a big loss, we want to hold that position and wait for the loss to reverse. So why do we not try to do the opposite? Instead of focusing on a different method of technical analysis, why do we not focus on our psychological analysis? That is going to do us more favor trading this financial market. Now let me quickly navigate to another analysis here. Now look at this. I am combining various terms for different traders to be aware of what I am analyzing here. Now you look at this SMS. So for people that trade the smart money concept, they know what this is. the shift of market structure. And then look at this, the basic retail method, a simple trend line. And then look at this, I have BOS, break of my market structure. So what we have here is market breaking previous high, trading to the upside, creating a higher low in respect to this low, and then failing to swing higher, creating a shift in market structure. And then what happens next? Market creating a low that is lower than the previous low. So this is your break of market structure to the lower side and a shift of market structure. Now, what's going to happen here, as a smart money trader, you're going to draw your fee from the last leg that broke the low and then wait for your retracement to your OTE. If you are a trend line trader, what are you going to do? You're going to wait for the market to retrace back to your trend line and then you take short. So once you look at all of this method of analysis, you are going to find a lot of confluence between the various methods of analysis. Yes, some are more precise, but the truth is that most of the simple method of analysis, they do work. And we seeking validation for something more difficult is the major reason why we lose. So my major takeaway from this video is work on your trade management, build your winners, cut short your losers. Yes, when I say cut short your losers, once you have a dedicated stop loss, this is where I want to go out. If the market comes to that level, don't amend it, don't add so you're losing position. Instead, you can wait. If my market, like personally, if my market is in loss, what I simply do is I stack. If I'm in a sell position here and it's retracing against me, I'm going to stack sell stop instead of me selling more, selling more. Now, I'm not going to be increasing my loss as long as market is above my initial position, but if market trade below my initial position and I'm making profits, I'm going to be adding to my positions using the sell stop orders. So work on your trade management, work on your psychology. Your technical analysis skill might be good enough, just backtest it, make sure you find consistency in it. If you have anything above 50% accuracy, then you're good to go. You're good to go. So that's all. I hope I add value to your trading journey with this video. Go into your chart, practice, manage your psychology. Do not be scared of taking on the challenge and go on and be a great trader. Till another day. Goodbye.